Hello everyone. Today's video will cover risk management, where we will share a few techniques on how to manage this effectively. For example, let's say we've opened a one-lot position in gold. Here you can see the one-click trading feature. It's specifically designed to minimize potential errors when opening trades. If you need to enter and exit trades quickly, you can enable one-click trading. To do this, go to the Tools menu and select Options. In the Trades section, check the box for one-click trading to activate the feature. By enabling this, the trader acknowledges the associated risks. Let's open a one-lot buy trade as an example. The margin allocated for a one-lot trade is shown here as $2,631. This represents the available margin. If the market moves against you and you lose $97,000, your margin level will drop to 100%. As a result, a margin call would be triggered. To protect your position from further losses, you can set a stop-loss order. For instance, by clicking here, we can place a stop at $24.50. If the price reaches this level, the trade will automatically close. After saving this, if the trade reaches the specified level on the chart, it will automatically close. As you can see, the trade will be closed at $18,198. This is how the investor can limit risk. Another risk management strategy is to set price alerts. If you right-click on the chart and select Alert from the trading menu, you can create an alert for a specific price level. This way, you will be notified if the price reaches or falls below your alert level. The alert can be dragged and dropped here. You will receive a pop-up notification if the price breaks below this level. This is another effective way to manage and protect your risk. That wraps up our discussion on risk management. In our upcoming videos, we will explore different topics. See you next time.